Good afternoon, everyone, and welcome to Office Hours with Michael Kitces. Don't adjust your screens. I know this is going to be hard to believe, but I am not Michael Kitces. My name is Jeffrey Levine. I'm the Director of Advisor Education at Kitces.com, and with our time together today on Office Hours, what we're going to do is we're going to talk about what is perhaps the biggest threat to advisors today. And no, it's not robo-advisors. Despite the cries from many over the last few years about the rise of robo-advisors and they're going to take over, and that hasn't really happened. Even those that are the very successful robo-advisors, like a Wealthfront, has seen its valuation drop dramatically over the last few years. Many of the robo-advisors that came to forefront with great fanfare have since fallen by the wayside. And even the recent studies regarding millennials, who are largely understood to have the greatest desire to work more with a robo-advisor or those that are digital in nature, say that they want the advice of a human to go along with it. So the rise of robo-advisors has been greatly overstated. But with that, what then is the next disruptive what is the next possible disruption for advisors in this space? And I will tell you, I personally believe that CPAs, tax professionals, actually represent the greatest threat to non-CPA financial advisors today. And there's a number of reasons that's the case. First off, CPAs themselves are under margin compression. They're facing a lot of the issues that advisors are now starting to face. And CPAs have had this pressure for a lot longer than advisors have. How long have clients been able to go to the store and buy a TurboTax or a similar type of program? It's a lot longer than they've had access to financial planning software. And frankly, it's a lot easier to get that output to work, right? Because when you go and you want to complete a tax return, there are really only two basic goals you have in mind, right? You want to fill it out correctly, and you want to fill it out so that you pay the least amount in tax possible. That's really it, right? There are no other goals. On the other hand, financial planning has so many different competing goals, and it's much more difficult to program that language into any computer. So if you're a CPA and you realize, well, gee, my industry might be under a siege, where do you look next? And it's oftentimes going to be to the financial planning space. So that's one reason why CPAs represent the threat. Again, even technology has made it easier with integrations into tax planning software. It's so much easier today to prepare a tax return than it was years ago, and more people are doing this themselves. And even some of the, I hate to use the word budget CPA or tax professionals, but some of the larger franchises. So like even an H&R Block. Last year, H&R Block announced that they had a partnership with IBM's Watson, right? Now you have Watson now going and looking and saying, well, what other deductions are possible here? So it becomes very, very, very challenging to compete that in a world, again, where the goals are relatively straightforward. I want to report my taxes correctly, and again, I want to pay as little tax as possible. Beyond that, there aren't that many goals on tax software. And even traditional accounting is going to come under siege because of blockchain technology. That represents a significant challenge to the traditional accounting profession, whereby they're recording and verifying. If we have everything available on open ledgers, well, let's face it, that again takes away a lot of the job opportunities that the traditional CPA does. So that's one of the major reasons. Again, CPAs themselves are under threat from both margin compression and obsolescence. So they've got to look elsewhere. The other reason that CPAs are in a great position today is that CPAs are one of the more trusted professions. A recent Gallup poll, for instance, showed that about 38% of people voted CPAs with a high or very high degree of ethics and trust. Now, that may not sound like a lot, 38%, but those were the amount of people who voted them as high or very high. Now, let's compare that to some other financial professions, such as a banker. Well, bankers actually were about 50% less likely to have either a very high or high degree of trust and confidence. And what about stockbrokers? Stockbrokers Well, stockbrokers were 3 times less likely to have those same levels of high degree of trust and a high degree or a very high degree of trust. So again, CPAs, while 38% may not be the pinnacle of trust and and understanding with clients, it's a lot higher than others in the financial profession. And don't forget, CPAs have a deep knowledge of their clients going in. When you prepare a tax return, you are picking up a lot of information from your clients. That's why over the years, so many firms have adopted some of these 1040 overlays. You've probably all seen them at one point or another, where you go and you take that 1040 overlay and you put it down against the actual 1040 and says, "Whoa, the client has $3,000 of interest. Why don't you inquire as to what interest rate they're earning or where those assets are being held, etc." So those 1040 overlays, that's all information the client CPA has already. And clients like one-stop shopping. That's why so many financial planning firms today have begun to incorporate tax planning, because people want to go to where it is easier for them, right? They want to go to one place and have everything done in a reasonably quick manner and an effective manner. And obviously the tying in, it's that much less that the CPA doesn't have to send out or request documents. They already have the documents, the 1099s, they control it. So it's an easier process all around. Things are easier for the client, things are easier for the CPA. It's a win-win-win in those situations. So again, that's another reason why CPAs represent a potential threat. And even if we look back at some of the recent statistics that have come out at where CPAs are today, what services they're offering today, well, about 54% of CPAs today already offer services in retirement planning. About 48%, so about half of all CPAs do succession planning, and about 23%, so already about a quarter of CPAs today offer some sort of wealth management service, if you will. So this is a really big issue for advisors coming on the forefront, and it's not going to go away anytime soon. Think about CPAs and the push that the AICPA itself is making to get CPAs more involved in the financial planning process. The AICPA is making a huge push. For starters, for those that don't know, there actually is already a CFP equivalent, if you will, that only CPAs can get. It's called the PFS, or Personal Financial Specialist. So if you've ever seen a CPA with the designation after their name of CPA/PFS, that means they're going to be in the financial planning end of the spectrum. In addition, for those that don't have the CFP or that don't have a PFS designation, well, in those instances, the AICPA is trying to make it even easier for them to gain knowledge, those CPAs to gain knowledge, as well as to display that knowledge on their website to attract clientele. For instance, recently, the AICPA launched its new PFP, Personal Financial Planning Certificate Program. The certificate program includes a number of different certificates in the areas of retirement planning, risk management, investment planning, estate planning, as well as actual practical applications for CPAs. And a CPA can take any single one of those areas, pass the test, get a certificate, and in addition to that, get what the AICPA is calling a digital badge. So they would get a digital badge for their website. It would go there and it would be able to prominently display that, hey, I have the knowledge in this particular area. I'm able to help you with it. It's a major, major push by the AICPA. In addition to that, they've got resources such as ads that are already created and brochures that are already created. They are trying to push CPAs in that direction because they realize that there's a tremendous value that can be had by the public by CPAs engaging in this. And again, it protects the CPA on the loss of margin on their end. So don't expect this trend to go away anytime soon. In fact, it's likely to continue to accelerate over the years, where the advisor will become under pressure, not from robos, that robos aren't the greatest threat. It's the other human beings, the other advisors who have a deep level of knowledge of the client situation because they have that tax information and because they have a deep deep relationship with the client. Again, CPAs typically represent the most trusted advisor when compared against others like lawyers, CPAs in the mix, as well as the financial planner, stockbroker, insurance representative, etc. So you have the built-in trust, you have the knowledge, and now you have the push and resources and the backing of the AICPA and other organizations. So that's why, again, advisors really need to keep an eye on this. One item of note here, we have seen this in practice already. When the DOL fiduciary rule came out, it actually halted some of the larger CPA firms in their steps because they didn't know what to do, right? And they've got a good business already, and let's wait and see what happens. But now that the DOL's fiduciary rule has kind of gone by the wayside, we've seen an increase in many of the larger CPA firms, the national brands out there, the ones with $20+ million in revenue per year. We have seen now an uptick in their acceptance of the wealth management field, and they're beginning to adopt that service more and more, and they're beginning to see more and more uptake there. So again, a greater threat today from your fellow CPA or your fellow professional than from the robo-advisor. So what can you do to prevent this? Well, a few things. Obviously, you want to have a deep level of knowledge on the tax planning side. That helps, right? That's a easy winner. The other thing is, though, if you're already working with a CPA, you want to keep them out of your business. Well, how do you do that? Well, you make yourself indispensable to that CPA. So help them on the planning side when there's a question. Be a resource for them. Have everything buttoned up come early January, February, etc. What if you were to make that CPA's life easy and send them a list of all the 1099s that they should expect for that client, and send them the list of all the cost basis information that they're going to ask for later anyway? You have it, it's done. Put that CPA not as your adversary, but on your side. There's a tremendous opportunity for you to do that, not only to protect yourself from those tax professionals who may at some point step into your field, but also to embrace working with them and to expand your business. So that's our takeaway for today, is that we really want to be careful, again, of the CPA's growing potential to come into the financial planning practice and take over those relationships that were with the traditional wealth manager that didn't offer those services. I want to thank you for joining this week's Office Hours with Michael Kitces. Again, I am not Michael Kitces, but Michael will be back next week. And take care, everyone. Have a great day. Bye-bye.